Anthony Bell goes, thousands and thousands of screaming people follow.
18-year-olds, yeah.
Now, competition in business is always good for the consumer, of course, but the government is bringing in reforms to the Australian banking system to get a fairer deal for customers.
In the move to make smaller lenders, such as credit unions and building societies, more appealing to the public, the proposed measures will focus away from the larger banks. So could a stronger so-called fifth column offer us more than the big four? We sent a camera out on the streets to get your opinion.
More power to the little guy. Give him some competition and stick it up them, I say.
It all depends really on whether, I suppose, how they're managed. I'm not sure that I trust the small lenders as much as I do the larger.
Competition's always a good move. Absolutely. Yep, the more encouragement they have, the freeing up some policies to help them become bigger players in the market helps everyone.
Absolutely, I think competition is very healthy for the marketplace, and there should be, more opportunities for the smaller guys, for the smaller banks.
For more, we're joined by money expert Anthony Bell. Hi, Anthony. It's proposed these reforms will kick in next month. Will they stick it up them, like that lady on the street just said?
Well, so we remember the last Reserve Bank interest rate rise, and we saw that Commonwealth Bank actually lifted it beyond that interest rate rise. So this is designed to try and trigger the big banks to stop thinking about going away from the general trend and give some competition back and make consumers start to think about transferring their mortgages or their credit cards back to the smaller credit unions. So, yeah, the idea behind it is actually quite sound.
Is there some confusion out there about what exactly is a bank, a mutual building society, a credit union?
There is, mate. I mean, the biggest thing is they've all got money and they all sell money, so try and think like that. But behind all that, the credit unions and smaller in size, they generally don't have external shareholders, and this is a very important point because they don't have to be really highly profit focused, which means that they can make a lesser profit and return those values back to their members. And as we said, the big issue there is that they are generally a lot smaller, so they don't have the big overheads. They can run their business for a lot cheaper, which means that they can pass on those benefits to the people who are lending money from them.
Is there anything else that the smaller lenders have to offer that the banks don't?
Well, generally, Kylie, in that as well, is that they have lower fees and charges as well. So besides the interest rate, they generally are lower fee and charge of places. They're community owned and community orientated, and you can probably see some, more personal service. So there's someone behind a counter that you can get to and speak about your loan. And the other thing too that's very important is they are a better chance of being competitive because they haven't got those very high costs that the big banks have.
OK, so the government's jumping in and saying we're going to support the smaller guys. How's it going to affect the big four?
Well, do you remember years ago, in about the 90s, Laz, when Aussie home loans first hit the market? And look, the big banks at that stage were at 12% interest rates, and Aussie came out and they were actually, at 8%, and it forced the big banks to come down because everyone started leaving their big banks for that cheaper interest rate deals. It's designed to do something of the same and designed to actually make the big banks stop increasing interest rates higher and higher, knowing that they may lose their clientele to the smaller banks if they can.
Yeah. And we heard one of our viewers say they just don't trust the smaller lenders. And I was going to say, I think there is maybe that perception that things will get tough and the smaller ones will put up their interest rates more than the big four because they can cop a bigger whack, if you like. Is there any truth to that?
Well, that's a big point, Kylie, and a very valid one in that so far as when people try and do marketing exercise, they get you over and then they slowly move you back up afterwards. Look, the big thing there is that the government is actually also too regulating and checking, sort of on the big banks and the small banks. So they've actually got a regulatory authority that's highly governed and very highly sort of protected. So I'd be probably sceptical of the fact that the small guys will be able to do this in this market, particularly if they've got it right up at Treasury level where Wayne Swan's coming out and supporting them. They're not going to actually go back and possibly risk the raft, of the federal government as well on the other side.
Are a couple of the smaller guys just sort of shop fronts for some of the bigger guys? You have to be aware of that.
Yeah, not really, Laz. I mean, the big thing is when it says something says credit union, it generally means it's owned by the members. Now, who are the members? They're the people who bank with that bank all the time. So they generally try and pass forward those benefits back to you and I and Kylie if we all choose to take our mortgages or our credit cards somewhere else.
OK. All right, mate. Thank you very much for that.
No worries.
Appreciate it.